Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Tuesday, 15th August. Yeah, finally getting a little volatility. Welcome, everybody. If you're watching the recording, I do have a class coming up on a week from today for Pacific. Something I watch very carefully, the VIX, how you could actually use it as a timing mechanism for some longer term swing trades. In fact, it's worked great this year so far. I'll go through some historical data and so forth. So if you're interested in joining that class, you can either sign up on the website. There's a link below. Also sign up for the newsletter and so on and so forth. So we get that out of the way. So again, it's a week from Tuesday, a week from today, in fact. Okay. All right. Let's get into, speaking of, we are starting to get a little volatility. Rates continue going higher. I've been talking about that. In fact, I wrote about it. I've been writing about it, gosh, for close to a month now. If you haven't gotten the newsletter, I always talk. I've been talking about rates over 4% have been a good sell signal, and sure enough, again today rates jumped again. Everything went up. So let's get right into the charts, share with the charts with you, and go through some stuff that we've been following through on. So the S&P up until today, just very, very choppy. Talked about this Friday. We've had this kind of choppy, kind of meandering, channeling kind of action down. And even today, we keep having this. Yesterday, we had a rally, broke another low. And again, you can make this case for a channel, which again, has been a bit of a challenge from a trading perspective, because, you don't really have any kind of levels. And if you sell the lows, you're going to get whipsawed. If you chase the highs, you're going to get whipsawed. So, it's been a bit of a challenge trading. Now, the good news is that hopefully we get some momentum and start really moving down into some of these lower levels, which I've been kind of focusing on, as I've been talking about, maybe a 4 or 5%, maybe even 6% correction will take us down into these levels down in here around 4,300. That's ultimately where I think we're probably going to head. Also coupled with, with the VIX, jumping, there's some key levels I'm looking at on the VIX. I'll go through those in the class so you guys can pick that up as well. Okay. But generally speaking, again, we had a new low on the S&P, but nothing, again, dramatic. We still have to break below, in my estimation, we still have to break above that low to change any of the, the daily long-term dynamics. You take a look here. On the big charts, which is the only thing I primarily focus on. Why am I looking at this? Because every kind of corrective measure here, we pulled back, and pivot has been held up until here. So that's obviously the definition of an uptrend here. We've been kind of holding. Whether, so I think at this point, we still have to hold right along this 44.13. If we hold that, then we got another leg up. But that doesn't mean, we can't fall all the way back down here and then have another tradable rally. I'm not of the kind of the mindset that we can't go long and short in any kind of environment. So that's kind of where we're at on this. Okay. NASDAQ is strong today. In fact, the NASDAQ still has not broken this this kind of support area that I've been talking about, this 15,025. So nothing really changing. We had some strong moves from NVIDIA today. Oracle was up. So tech is still, maybe tech goes back to the leadership. There were talks that tech was no longer the leadership. And, anytime anybody, the media and all the pundits start talking about some stuff, as that's generally when that stuff doesn't work. So, I mean, we can, I talked about that with the XLE. Nobody loved the XLE at the lows. Everybody loved them at the highs. And now I think, same kind of thing. So you got to be very careful with all that. And in fact, up here, the NASDAQ, who didn't love NVIDIA and Meta and, to the moon, Alice, with all the AI and all that. And that was right up here. So just a quick reminder, just my little, if you are still kind of a follower rather than than an independent thinker in trading, you're going to run into all kind of problems, and might as well just give it up right now. I tell you right now, I mean, this last year, I've seen so many people fall by the wayside because it's, if you don't have the patience and the discipline to do this, like I always say, save yourself a bunch of grief, time, and money, and go find something else to do. That's, I can't put it, I really can't put it as straightforward as that. And I'll be the first one to tell you, I always talk about that in my classes, whatever. And again, anybody tells you this is easy, you should just say, thank you very much, and head the other way. Because it's like golfing, one of the toughest things you ever do, but it's, if you enjoy the challenge. Anyways, that's my little, it's my little rant for today. Anyways, so look, nothing really changing. So there's not a lot to talk about until we actually break. Let's see if we can finally get some momentum breaking 1525 on the NASDAQ. The Dow did break the range. We have some nice levels below here that I'm looking at in the Dow. That was, again, just a big old mess. It looks like it finally broke down today with some of these stocks finally giving way. So we'll see if that actually continues and takes us down to some good levels. Russell similarly finally broke down. It's kind of just been very just kind of sloppy, just rangy, this kind of, again, this kind of channeling, erratic type of channeling action here. So we'll see. We got some levels down in here I'm looking at as well. And again, culprit is the bond market, 30-year in particular. So we were in the TLT, we got out. Pretty much no harm, no foul on that. We bought it here and just couldn't even get back beyond, much past that. And, I was looking for a 5X trade up to here, and obviously, so it is what it is. Some of my members actually did take profits here, so it's okay. And then, the 10-year sitting right on the lows again from last fall, really. So that is going to be interesting to see if this is again the peak in rates like we had last October, or we make another new low in the price of the 10-year, which comes all the way back down to 107. We're sitting at 109. That's another 2 points lower, which would take yields above 425. So that's going to be see if we can take out that yield high at 432 on the this is the 10-year yield futures here. Okay. Regarding the dollar also corollary to higher interest rates. If you don't understand that is what it is. So you can literally draw, you can point to that right there and put these charts side by side. You can see as rates have been climbing and climbing, the dollar's been doing the same. So rates and the interest rate market is correlated to the dollar because of the exchange rate. So now we're right up against these very important levels. I think if we do go higher on rates, we probably break out and go up to here. You can also just look at your charts, and that peak in the dollar corresponds to the last peak in interest rates. And then clearly we've fallen, and now we're kind of getting another bit of correlation here at these lower levels, but it's still somewhat of a corollary here. Again, the yen is the currency I've been talking about ad nauseum, still not there yet. Try to bounce. That was not a level I'm not that interested in. It possibly goes lower here. And then the rest of the currencies just similarly, just kind of chopping around. You can see the Swissy, pound, all of the currencies, especially the Comdols are the ones that are getting hit quite a bit. So there are some levels on the Canadian that I'm looking at. But generally speaking, you can see all of the currencies just very, very choppy. don't need to spend any kind of time on this thing. I mean, look at this peso. After having some really nice movement, now it's also sitting in a kind of sideways. Silver did catch a little bit of a bounce off that right there. It's kind of holding up a little bit better. There are some levels below on silver, looking at down in here. And this is the best level down below there, but that's a country mile away. So nothing going on there. And then similarly, gold just dead in the water. Oil, focused on oil again. We are failed to again get any kind of traction above 83. And again, remember, we've already rallied. We had a massive rally. So this is actually probably not a bad deal to be trying to buy a pullback somewhere down along these areas down in here. You know, you can't expect this thing just to go straight up in the air. You're going to have pullbacks. So not a big shocker that this thing, you know, everybody's starting to get, again, very bullish on oil. And now we're going to see if we can get a pullback down into the 78 area as well. Similarly, you know, I talked about nat gas last week, and again, made the comment that, you know, we've had so many false breaks on nat gas that there, you know, again, until it breaks above 3, doesn't mean anything. I mean, we're just basically in a massive range. And sure enough, anybody chasing that rally in nat gas, and even now it's kind of in no man's land. This thing could literally go back down to the 225 area or lower, even back down to 2. Wouldn't shock me in the least. So now, you know, again, this back and forth kind of trading is still in play here. You know, grains also settled in. It's settling into these ranges. You know, wheat did finally break down after these massive moves. You know, again, every time you get something out of Russia, it rallies. And if you chase these things, or even if you try to buy, you know, once this is established, if you try to buy pullbacks, you're going to get hurt. So don't do that, right? Just now that price is really extended, now there may be a chance down around the, you know, 550 area or so, something like that on wheat. And then similarly, corn is kind of just meandering about here, finally broke down. There are some levels in the continuous chart on corn, all the way down to 450, I believe, something like that on corn. So, you know, it looks like corn may be headed possibly ultimate, you know, low is like $3 on corn. So can corn fall all the way back down? Of course, but right here is where I'm looking at, right around 450-ish area on corn. Okay. All right, everybody. So again, you know, hopefully we get some volatility jump in here. We got to get the VIX above, you know, pretty much if it trades above 18, then I think, you know, that will really get things going here. We've been lacking volatility for the last month and a half with the VIX sitting at the lows here. But I'll, you know, again, if you're interested in learning how I look at the VIX, not the conventional way, and a lot of people say, well, it's not really having any predictive value. I beg to differ, and I will show you how if you sign up for the free class. Okay. All right. So that does it for me today. I'll see you on Friday. We've got, let's see, we've got we had Home Depot. It was all over the map. Really, I mean, these earnings this week are not really moving a whole lot of stock right now. We have TGT, Target tomorrow, the big one, Walmart on Thursday. We also have Cisco and some other ones. I think Ross Stores. So a lot of retails, Ross Stores, and what's the other one? TGX or TJX or whatever that is. That's coming up next few days. So, and then we have Fed minutes tomorrow. So that may create a little bit more volatility, especially with rates the way they're doing. So, okay. All right, everybody, have a great rest of your week, and I'll see you on Friday. Take care.